Energy remains the hot market. Obviously, we're going to talk about oil, but the focus in this video is going to be on an energy sector that nobody's talking about right now, uranium. We got clear signs that profit taking might not be the worst idea right now. I'm going to give you my 3 uranium stocks that I would take profits on right now, and a couple that I'm putting on my buy watch list if the uranium stocks come in, because we see a rotation from uranium to oil in the short term. Let's talk about it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
Okay, so here is the oil price on the weekly. Obviously, today is Wednesday, so the meaningfulness of this chart is not great yet. But what I want to show you is, with all the news that comes out, with all the paranoid YouTube videos that tell you that Third World War is coming, the aliens are landing, everything, it is really good just to zoom out and look at things from on the bigger time frames. And if we look at it on the weekly, what do we see? We see a breakout, we see a retest, right? And we see that we are holding the gains. Those are the 3 most important things. Also, bonus, look down here at the RSI, we're not overbought yet, so we have plenty of room to run on the weekly. Now, let's flip on the daily real quick before we get to uranium. And you see, I like what I'm seeing. Yes, we got some negative divergence, minor in the oil price, but we made a higher close yesterday. That confirms the breakout. All we need is a weekly confirmation on the higher time frame to get the next big green check mark on oil. Looks like we're going to go sideways for a little bit. That makes complete sense considering the geopolitical situation. And this is a big time breakout, right? This is a big time breakout from the downtrend that has been in place since 2022. So either you get a monster move up or you get a consolidation, a retest, and the market is trying to figure out where to go, which that makes more sense if you factor in the economic situation and the economic uncertainty. So let's jump into uranium, because that is the market that is actually more interesting, because we look at the URA and we see a clear, crystal clear sell signal right here, right? This is a island reversal textbook. We have a clear negative divergence. We are still overbought on the negative divergence. So price of the URA went up. RSI is not confirming that anymore. So momentum is lost. Buying power is leaving the market. So what does that mean? Well, you are going to say gap fill or gap fill here with test of the uptrend. Those are the target zones. So we're talking about 5 to 10% downside. Now it's up to you to decide to say, is this a trade that's juicy enough for me to sell my position to buy them back 5 to 10% lower? Or do I want to stay in the uranium stocks? Because that's fine. I'm not worried that about a 5 to 10% correction. That's up to you to decide. Let me show you a couple of charts, what I'm looking at. So first off, Sprott Physical Uranium Trust. Interesting. Look at this. Broke the downtrend that has been in place since 2024. Now, it's a weak breakout, no doubt about it, right? What do you mean with a weak breakout? We broke out, but then we had a big wick, so the additional buying got sold right away. We closed below the open. Okay, now we retested it, got bought up a little bit. That's nice. It's not great yet, no doubt, but it shows us again the uranium market is changing, but short term, the uranium stocks, which moved first and moved viciously, are overbought. Now let's take a look at some of the big players. You know, I'm a big fan of Denison. I recommended it here when it broke the downtrend. If you're in this, you're sitting on really nice profits. And the uptrend is, no doubt, crystal clear, looks really good. However, we still have this open gap right here, which would then also correlate perfectly with the uptrend, which is about a 10% downside, and then seems pretty reasonable if we fall back below this yellow zone, which used to be, as you can see, a pivot zone, right? So if we're below it, we're going lower. We're below it, we're going lower. If we're above it, we go higher. We're above it, we go higher. Above it, we go higher. So we broke above it, great, right? Now we're fighting. If we fall back in, it might be a good point to take profits and to re-enter here. If you are more on the risky side, willing to take the bet, willing to take the risk. If you fear you might miss more upside, I would just sit out. Personally, I would just sit out a correction phase and maybe use that to add to it, right? USC, look, everybody loves USC, but this one is tricky, right? We got double top potential. We got a big wick. I don't like that. It's got sold off so hard when it tried to break this big resistance zone that, as you can see, goes all the way back to 2022, the old all-time highs. So as you can see, we're about to fail the breakout like we did here. Correction is coming. We have the same big gaps, even bigger gaps open. One right here, one right here. I'm not sure if we're going to fill this one down here. This might just be a breakaway gap, but I'm just saying that's what we need to watch out for. I wouldn't mind taking some profits on UEC, right? The one I would definitely sell is Cameco. This one is overbought, massively overbought, as you can see right here. We also obviously have a negative divergence. We have an island reversal starting to set itself up. Hasn't happened yet. These jumps are just crazy. These jumps are institutional money just pouring into the uranium sector, and there are not that many stocks that they can invest in. So that's why these stocks went up really hard. But if this money now decides, all right, we played out the uranium story short term, let's move over to to oil, then obviously Cameco might come in at least to 60, which that would mean a 15% decline. That's what I can see, that Cameco goes down more, and the next one that I'm going to show to you, which I would also personally take profits on, then some of the smaller ones, right, some of the smaller uranium stocks, probably not going to go down as much. Now, the other one where I would take profits is BWX Technology. I mean, it has been a monster. Look at this. In 2 months, this thing went up about 50%. Now, it was massively oversold, but look how overbought we are. I mean, let me go back on the daily. This is the last time we're at similar overbought territory, and we still had a big move up in it. That's true, but I look at this and I say, okay, here we were in the middle of the uptrend channel. Not the middle, but like 2/3 of the uptrend channel. There was still room to run, right? Here, which was, we had an even higher extension that formed the first upper end of the uptrend channel. And as you can see, we hit it on the daily almost perfectly, reversed. God, that is a nasty looking candle. I can see that we try this again with the uptrend channel. You know, this is a bigger stock. There's some institutional money in this. Institutional investors might say, oh, let's push this up, get some retail people in there, and then we sell. I would sell this into strength. Obviously, Oklo, always a crazy stock. I would not be a buyer until we hit the zone around 56, 55. Then this could be interesting. But I'm just pointing out that we have big negative divergence here, right? Topping tail right here. I would not be on the buy side of Oklo right now, but I also acknowledge this is a crazy stock, right? This is a completely crazy stock that can go to 70, 80 in 2 days. If there's one tweet. So if you say, I don't want to sell this, I'm not going to fight you on this. That makes sense. The other two, Cameco and BWX, much weaker. Now here are two that are interesting. Your Energy, quietly, one of the smaller ones. It's a producer in the US, which I like. Finally was one of the last ones to break the downtrend from 2024, of the producers, that is. And as you can see, we're trying to get above this purple resistance pivot zone, right? we're fighting with it. Now, if we get a retest, if we get some bigger weakness on this, around back down to 95, gap fill, retest of the downtrend, this is interesting to me. The other one is an explorer, but it's a really popular explorer at Sky Harbor, which quietly has not had the run that the producers and advanced developers had and the bigger stocks. Why? Because that's where the money goes in. The explorers move last. The explorers are small. That's where the retail money goes in. And most of the retail, not well-informed money that buys these type of stocks is not yet on the uranium train. But as you can see, we develop a nice uptrend here. We're not overbought like we are with some other bigger uranium producers developers. We don't have a negative divergence of the RSI here, right? If this comes in, if we can get this around 34, 33.5, CAT that is, right? It's listed on the TSX Venture. This is a stock that I'm interested in as well, though again, it's a smaller explorer. It does not have the quality of an Energy Fuels, the UEC, and so on. So that is the uranium market. The situation looks like a correction right now, but I want to leave you with two more big signals, well, one big signal and one signal to watch. The big signal, silver, breaking out to new highs. Come on, be in silver. If you're not in it, any weakness, buy any weakness. I would even open up a position right now if you're not in silver at all. Platinum, look at this strength. We had this one nasty candle last Friday, and we almost got it all back. Platinum, on any weakness, you want to get in this trade. So, if you like the value of this video, and you haven't subscribed yet, please hit the subscribe button. It takes you 1 second, helps us out a lot. We give all the value to you that we can on the smaller markets that not everybody talks about, where we can make a lot of money. And we'll talk in a couple of days. Talk to you later. Bye-bye.